Welcome to Raise and Deploy, a podcast dedicated to international investments with insights from the world's leading investment professionals from New York to Timbuktu. Each episode, we bring on a new guest to discuss the trials and tribulations that occur when seeking substantial returns in foreign markets. We cover the full life cycle of an investment, from the moment you contemplate raising capital offshore to the final check cashed on the returns. Today, we sat down with Renato Abissamra and Jamie Keller of Spectra. Spectra are an investment fund based in Brazil that invests across Latin America. They talk about their backgrounds, raising their first funds, and what types of investment excite them most in the coming years. One thing that you should look out for is their innovative search funds. Let's get started. Renato and Jamie, welcome to Raise and Deploy, the podcast. Very excited to have you both on. We've known each other for years. Really excited to get into the weeds of not only what you've done in the past, but what you're going to be doing and how you've revolutionized investing in Latin America. So, Jamie, why don't you give us a little bit of an introduction into Spectra, where you got your kind of spurs, and then we can get into the conversation.
Perfect. So to give some content, first and foremost, thanks for having us. And just to give some context on Spectra, we started the firm back in 2009. And for those listeners who don't really understand or are not too familiar with Brazil and Latin America in terms of private investments, back when we started the firm, we basically only had a couple of private equity managers. So we had a clear evolution of what we call private markets or private alternatives in the region. But when we look back to 2009, that wasn't the case. But during this time, when we decided to launch the firm, we understood that we had a certain evolution and complexity. We had many new managers, new private equity managers showing up in the region. And we had at this point in time, something very peculiar in Brazil, where we had interest rates coming down. And people now started looking into investing in private equity. So it was practically the first time families started paying attention to this asset class. And we didn't have really a fund of funds product in the region or in Brazil to cater to these investors. And given the asset class was new, very little information regarding private assets in general, we thought that creating this fund of funds model was perfect for that time to help investors who are willing to invest in this asset class to have their allocation.
Thank you for that. That's actually really important. You see a huge opportunity in Brazil. You've expanded that into Latin America. You're happy with the size of market that Latin America produces because of the problems and the inefficiencies that are posed by that region specifically. That's great. Thank you for sharing. So Renato, you're here, you're in Brazil, you're focused on Brazil, you're focused on private equity. You were the first firm to kind of really bring this into a fund of fund product. Where did you look first? What type of people were you investing in?
Yeah, since the beginning, our mindset was to look for opportunities in niches of the market that we saw inefficiency. And in private equity, you have the big firms looking for bigger assets, bigger firms to buy, and there was a few number of them. So that was the peak of the pyramid. Somehow, some money flowing in, and we thought the opportunities were not there. So we decided to look down for the bottom of the pyramid, for smaller companies and mid-market companies where there were fewer managers. Under the radar guys actually being able to explore and extract value from that strategy. So we focused on that at that moment. And the whole idea was to invest in funds and reserve a part of our capital to co-invest with them in a way to reduce fees, mostly. So that was the beginning of the concept of launching Spectra, so helping investors to allocate better their capital into different types of managers that were looking for different types of sub-strategies.
Okay, so Renato, you obviously you've been successful in private equity, but Spectra now handles investments for every type of strategy in the alternative investment space across LATAM. When did you see the need to shift into these other investment classes, and more importantly, why?
Actually, it was not a need. It was an observation. There was opportunity there, especially in the VC space, where we saw an ecosystem being formed. And since Brazil and Latin America is a big region, and with people very with access to mobile phones, and was somehow easy in our vision to make those technologies spread out to users here. There was an interesting ecosystem in terms of managers, but nobody was actually investing. And when we started investing, we said, normally we didn't tell upfront to our investors we are looking to VC, because they were afraid of the internet bubble back there, back in the years of 2000. So we start making positions with GPs that we thought could be the leaders of the industry in the future, and we somehow were right.
Just to give a data point, I think an interesting data point, in 2010, we had about 10 VC managers in Brazil, and in 2022, that number went up to 80.
Wow.
So it's a rather new asset class here in Brazil and in the region overall, and there was exponential growth in especially this asset class.
Yeah. So we thought it was going to be an interesting add to the portfolios to have not only private equity, but a piece of VCs investing in new technologies, and that the market could follow the trends of what we've been seeing in Europe and in US, and that's when it started.
Great.
And sorry, just if I could also add one more point. And when we look to developed markets, namely the US and Europe, we wanted to replicate, if there was a future Sequoia or Benchmark or Tiger here in the region, we know that we had to be a first mover to be able to get access. And that's exactly what we did. We made a small bet in 2014 in some of the very few VC managers that were around. And if things didn't go well, we had a very small portion of our portfolio allocated to that. But if things did go well, we were there and we could increase that exposure in future funds.
Amazing. And I've said this a number of times, especially around Latin America and Brazil in particular, the humility, the youthfulness, the well-educated population that Brazil is, and how powerful that is, and how powerful it will be from 10 years from now, because the amount of experience that they've got at such a young, early age. And I really, from what I've learned, is it takes people on the ground that have lived through these investment cycles in high interest rate environments to be able to manage these on a day-to-day basis. You can't just land into Latin America and go to Mexico and then expect you're going to be able to conquer Brazil next. It really is, and that I clearly see the benefit of your model by having these soft landing approaches via these managers. Love it. So you've gone into VC. Oh, sorry.
It's a complex environment. It's a complex environment, and we really think that locals really understand it. It's very cyclical. So we don't think since the beginning we always looked for teams that were generally local guys that has the perfect vision of that cyclicality and the problems that we face to build a company, to hire people, to live with the cyclicality of the environment, and that's how we think it makes sense to invest here.
On that note, we've seen an improvement as well with the service companies, the level of expertise that are coming out and the technologies that are supporting these companies and fund managers for that matter to be able to become global. So we see improvements in fund administration, accounting, legal companies, even the way that people are distributing credit through technology is improved upon. So I feel like the the ecosystem that's supporting these companies and managers is also improving, which is really great to see as well. So we talked a little bit about VC, a little bit about private equity. Where else are you excited about and investing in now?
So I think that at that moment, back in 2014, 15, we also saw some other opportunities emerging in the region that called our attention. So, for example, we were facing a very complicated macroeconomic environment in Brazil back in 2015 and 16. Also, in the political side, very unstable. There were a few families and pension funds that had started investing in private equity back in 2008. We saw the opportunity to offer liquidity to those investors. They could be uncomfortable of keeping those positions. And that was the moment when we started our secondary strategy.
Really interesting stuff. In fact, can you elaborate on that secondary strategy a little bit more, how that played into your overall approach to investing?
Since then, we evolved in that sense into our portfolios. Secondaries are now 35 to 40% of what we do in Spectra funds. We are actually the most relevant and active player in that space in Latin America. We're still buying pieces of funds on average 40% discount on NAV, which is pretty much more what we see in US and Europe. And this is, again, linked to our mindset of looking pockets of inefficiencies to allocate our capital. Not only secondaries, I think, same with distressed assets, distressed equity strategy, where due to the cyclicality of the region, companies are every day facing problems, and there was no manager at that point back in 2014, 15, actually look into those opportunities. We found one very interesting that posed the strategy to us, and we became anchor investors on that fund, starting to raise exposure into distressed assets, and was very successful. So I think that's the main, I would say, oversight on Latin America is that it's a very inefficient region with lots of opportunities. And once you have the right people with the right capacity to explore those niches, it can be potentially very profitable.
Completely see that. And one of the things that's really interesting is obviously you've done this primarily in the beginning with domestic capital, right? When did you start seeing the need to go overseas, or the value of you basically being a Sherpa to foreign capital coming into Brazil?
So when we look back at the beginning of Spectra, it was a very small fund. It was a first-time fund. So this was mainly funded by family and friends, like many other firms out there. And as we started growing our track record, showing people that this model, this very hybrid and opportunistic model of investing in private alternatives in Brazil and Latin America was working, we started getting attention from larger institutional capital. So already in our second fund, we had a couple of local Brazilian pension funds joining in our cap table. Already in Fund 3, we had our first institutional US capital. So a US endowment also becoming one of our LPs. And we started also having a larger pocket of not only single family offices, but private wealth managers who also, given our track record, felt comfortable at that moment to invest with us. And we've been very successful in this sense. We've had a re-up rate of about 90% fund over fund. And when we think about our LP base, we ideally would like to have practically an equal split between local Brazilian families, local Brazilian wealth managers, institutional investors, and then the remaining fourth of our LP base internationally. And today, where we see there's a slight imbalance in the international portion of our LP base. So it's roughly at 10%, and we would definitely like to at least double the presence of international LPs in our funds.
So how do foreign LPs impact your fund's approach?
We've been very successful in generating returns in local currency. Spectra funds are generating on average 40% IRR net of fees since 2010 to investors.
Wow.
And even though it's a very high level of return in local currency, international investors are afraid of FX impact. And this is for sure the main reason why international has not been investing hardly in the region or in Brazil in the last years. Our way of thinking that is we should look for the best returns we can deliver in local currency, and with time, even if we have an FX impact, it will also generate great returns in US dollars or euros. Or you have an idea from 2010 to up to now, generating 40% IRR in local currency, it actually means 30 to 31% in dollars. So we know international investors are worried about FX. It's part of the risk of the region. But I think that the message is that there is enough room to produce very high returns in local currencies that can compensate the FX impact.
And that's obviously why we started talking, right? We started talking about how we were going to showcase ways in which hedging would impact IRR versus leaving yourself open to these market moves. What I love about your situation as well is you have the ability now and also the capabilities to invest in other regions to diversify yourself away from that dollar BRL, the euro BRL crosses. Have you seen that a part of your thesis for a while now? Are you actively looking to diversify your own FX risk by going into new regions?
This is not a driver. We look for the region and the opportunities that we see in our deal flow will make us take a relative decision. So I'm not actually looking to have a balanced exposure in terms of currencies. I'm looking to invest in whatever makes sense to us in a risk return profile. While our strategy all through those years was to create relationship with managers in different niches. If it's VC, private equity, distressed equity, legal claims, mining, whatever, in Brazil, in Mexico, in Colombia, in Chile, in Argentina, that provides us a very robust deal flow in opportunities, then we make our selection. So we provide them flexible capital. We invest part of our money in their funds, so we can create that relationship, and then we have agreements to see their co-investments opportunities that become huge to us. So we can be very selective in choosing those opportunities that comes from those relationships we established, and reserve a part of our portfolio to give liquidity to whoever wants to get out or to give extension to funds. So it's an investment play. Spectra is an investor in alternative markets in Latin America, and we understand that the most specific, the most specialist manager is, the better he can do in that niche of opportunity. So we try to select who are those teams and provide them capital
with everything they need. Yeah, no, it's a very smart business model. And I like the fact that you're not being dictated as to where you're going to go through those different things. It's very much about focused on finding those right managers at the right time that you could ultimately feed with capital to do what they do best. I love that. So with that being said, let's not talk about what you're already invested in, but what you're looking to invest in and what's exciting to you right now. Which regions and which asset classes are you actively looking to fund?
Yeah, we still see better opportunities in Brazil rather than Latin America, ex-Brazil. So we've been around for a long time. We had an office in Mexico back in 2018. So we made a very deep mapping of the opportunities in the region. I think we still see some opportunities in venture capital in those countries like Mexico and potentially Colombia. There are some opportunities in secondaries in Peru and Chile now. But in Brazil, we saw a very strong move into venture capital in the last 3 years that transformed that niche in a more efficient space. And that's exactly what we don't like. We like to be where people are not. So we started to lower our exposure to VC in our funds and focus more in the private equity side, which is now in terms of, it's more scarce in terms of capital with very interesting opportunities. So potentially in the next 2 to 3 years, we'll focus more in PE here.
If I could compliment,
Yeah.
I think the largest shift in our asset allocation in the past years has been in VC. So in Fund 4, we reached about 25% of our fund was invested in VC, mainly through managers in Brazil and Latin America. And when we started to raise Fund 5 and invest in the beginning of 2021, this trend and this expansion, not only in capital, but in the amount of new managers coming into the region, made this asset class, as Renato mentioned, the most efficient.
This is a special chapter. We are really excited with the search funds strategy in Brazil. Spectra became the most active search fund sponsor in the region. We have 33 search funds that we act as sponsors now. We invested in 10 companies.
Just for the listeners' benefit and mine, can you explain exactly what a search fund is, and go through just maybe some examples?
Yeah, of course. It's a sort of fundless sponsor. So it's a team of people who will look for a target for acquisition, but they don't have the capital yet. They have sponsors that are providing capital for them do the process of search and due diligence and etc. And when they find that opportunity, they negotiate the terms and then bring that opportunity to the sponsors. They have the right to invest, but they're not committed with that investment yet. This was strategy created back in the years of 90s in the US in the schools of management, the top tier ones, and it became something that started to develop in the US and Europe back then. And in Brazil, we started to see search funds opportunities 2016, 17. And we are really excited about it because it creates a much better alignment of interest. Those people are going to invest in just one company. They're going to jump in those companies and become their CEOs, main executives. So, and the result of their gain will be 100% linked to the success of that specific opportunity. They're looking for smaller companies. So at the very bottom of the pyramid, which is more scarce, more inefficient, what we like. And we're really excited about that.
I love that concept as something that we've often looked at as a startup in our own situation. One of the things that I think is going to be paramount for VCs in particular is finding this commonality within their funds portfolio companies, and we see that right now. VCs have been very broad with their choosing of their portfolio companies, and as a result, now they have to make sure that they're profitable, these companies, as quickly as possible to maintain the valuations that they've set on these firms for a very, very long time. They're not CEOs necessarily, all of them. Some founder-led VCs, I think, are going to do really well in this situation because they're going to be able to help their startups go through this tough time. other VCs, the capital is going to dry up, and they're not necessarily going to have that commonality that's going to allow their portfolio companies to enrich each other. A search fund would be like that from day one. Everything that they do is about finding pieces of the puzzle that fit together and build a better, more profitable company at the end of it. Commandeer market, ultimately take over a sector potentially, and be able to get first mover advantage on these opportunities and create a more valuable entity at the end of it. Very, very smart. And it's something that obviously we saw similar things with the SPAC and
it's sort of SPAC, it's private SPAC. And there's a characteristic on the target companies of a search fund that is also very interesting, because those are companies with higher margins, so 20-25% margins, with recurrent revenues, low capex, low complexity business models, and what the searcher will buy the control necessarily. They will pay like 50 to 60% upfront, and the remaining with a seller finance facility. So it's a very simple model. So they're looking for simple companies, and then those guys jump in with a lot of energy, with the will of transforming that, not totally, but actually putting that energy in the growth of the company, aligned with the interest of investors that want to see them grow. So it's a very interesting business model. So there are small companies, and also we need to have a concern with the exit strategy. If you build a very big company in Brazil, Latin America, liquidity becomes a problem. So what we like is to see companies that will eventually generate like 5, 6, 7 times money to us. They're not going to become giants, but then we see liquidity in that layer of the market. So we are very excited with that.
And another characteristic of search funds, not only in Brazil but in the US and Europe, is that we're paying relatively low entry multiples. So the 30 plus searchers that we've backed and the 10 co-investments that we've invested with these searchers, on average, we've been paying 5 to 7 times. And if you compare to the VC portion, it's not even comparable. So it's something that we're buying high growth companies at low prices, and that's exactly what we all like to do here.
Yeah.
Very smart. Love it.
And just complementing what we were saying before, what we look in terms of of opportunities is not that we dislike the VC strategy. We still believe in it. And being honest, I think it's a good moment to invest, because valuations are lower. Those companies will face cash problems, so there will be opportunities to buy companies or stake up in companies at better prices. Companies that has a good pace of growth, but we see the private equity market even more interesting at this point, and not only the PE. Since we are looking to the broad spectrum of private markets, we really like the mining strategy here. Brazil is potentially on the biggest mass of ore in the world. We have all the types of ores in Brazil, and we have practically no one exploring that opportunity. We helped to create the first private equity fund focused in mining in Brazil back in 2015, and these guys are doing amazing investments.
Great. So we're coming to the end of the podcast now, but I know that you are raising Fund 6, I believe. Can you tell us a little bit about Fund 6, where you're going to be investing, where you're raising from, and the success today?
Yeah, I think that Jamie can help you with that. But we just made our first close with 50% of the size of the fund. We start raising it in September, and we made this closing beginning of this month. It's a tougher environment to raise money, especially from local investors that somehow scared with the macroeconomic situation, interest rates very high. But we've been having a very high re-up rate since the beginning. So our investors are re-upping with us, and then we are able to fundraise it. We think there is it's not a growing interest, but better signs of interest from international community that we've not been seeing the last years. And I think that's because the world is a mess also. So they're scared with perspectives in the US, there's war in Europe. So maybe that's the reason why they're starting to be more curious about Latin America. We've been talking a lot with international investors, and we think that this time would potentially bring a bit more money from abroad. But it's not a money movement yet. It's I would say that the first movers are coming.
And Jamie, same question to yourself, probably more focus on the race side. Which countries in particular have you seen interest from, and how have the conversations changed from this time to your previous raise at Fund 5?
Great. So Fund 5, definitely we were going through a different moment. We had lower interest rates. We had a much more favorable economic environment, and also demand for private alternatives in general. So we had a very successful raise for Fund 5, which was about 2 years ago. And although the environment now is a bit trickier, we were successful with our first raise at about 50% of the total target. So even in a tougher environment, because of our existing LP base, we were able to have a successful close. What we have been seeing, different from our past raises, as Renato mentioned, is much more interest from international LPs, namely US and Europe and European LPs. Also for Fund 6, we've had our first Colombian family join in.
Yeah, I would say from Latin American families also this interest has raised, right?
Yeah, definitely. So we've seen not only Colombia, but in Chile and some other countries in the region, and something that we have not explored in the past. So it's definitely a novelty. And as we mentioned previously, it's something that we are looking to expand our LP base internationally. And we think it's a great moment because since 2008, practically international LPs didn't have a reason really to diversify abroad. And now with a tougher global macro environment, people definitely realize the necessity to diversify. So I think this is what has probed international investors to come knocking on our door and looking to Brazil and LATAM specifically.
And the sentiment is clear because 4 years ago, we started our roadshow plan, shooting messages to international investors. They didn't even respond, and now at least they're responding and accepting the meeting. So this is a sign that interest may be raising.
Absolutely. It certainly is a tougher time, but it seems like your reputation precedes you and your success is a valued asset out there in these times. And I love that word, diversification. I think what happens with a lot of people, especially in the US, is they need to see this consistent approach. They need to know that you're not going to go away. And also, you got to remember, we couldn't travel. So we couldn't get out of the country and come and see you and shake your hands. And I would implore any listener to go out and visit Brazil. I myself had 30 meetings in 3 days with managers, you were included. And every single one of them was amazing, filled with very energetic, happy people that are very optimistic about the country, and I know the country is in good hands. It's a great opportunity. I think this is a great way to end it. Leave on a high note. Thank you so much for coming on to the show. Just a quick one, just where can they find a little bit about you? Jamie, obviously Fund 6, you're raising for now. If you want to just kind of let them know your main contact details, your website, and then we'll close out.
Perfect. So we can be reached at spectrainvest.com.
Perfect. All right. Many thanks. A big thank you to Renato and Jamie for their valuable insights into LATAM investing. What stood out for me most was their wide portfolio of investments, their opportunistic nature in deploying capital into other funds, and how FX can impact LPs' returns. I'm excited to see how their fund performs in the future, especially their innovative search funds. Thanks for tuning in to Raise and Deploy, the international investing podcast brought to you by Diaglo, the go-to FX platform for global investors. We hope that you enjoyed this episode and are looking forward to the next one. If you or anyone else you know has experience in investing internationally and would like to be our next guest, please reach out to us at jb@diaglo.com.